contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show. Information contained in this video is for educational purposes
folks.
only.
We already heard her. You know, she disappeared. I've tried to get her back on to do some promos, but she appeared briefly on Fiverr and then went back and disappeared, unfortunately, because I think she's a very entertaining announcer. Anyhow, let's get to the market. Just wanted to come and check in with you briefly today. We've seen we're kind of off the lows. It looks like we're looking to rally back to positive territory here. And I look at Twitter this morning and I see just a huge number of people trying to short this market, trying to pick tops, and this is nothing new at all. In fact, this goes back to day one. Back in the cave ages when people were trading the stock market, they had people doing this. And you know, if you were a college professor, you could come on and make a great case as to why this market, good morning, Spencer. You could come on and make a great case as to why this market is a sale, and you could come up with these amazing points, and you probably win the debate about why this market is a sale. And then you go out, you'd short this market, and you would get crushed. You know, the market has always rallied on a wall of worry. And pretty much any rally that ever happens, there are people, very strong voices out there in the retail world saying, you know, oh, we need to short this. What a great short. I'm going to reshort. And that is what has been happening now. Let's take a look, though, at the rally that has happened because, you know, I like to bounce stuff off people that don't follow the market super closely. For example, my father would say, good morning from my father would say, I talked to him yesterday and he said, you know, the market's really not doing anything. It's just, it's up and it's down, it's up and it's down. And that's a perception. I like to get these perceptions from the sort of people, the man in the street, let's say. Sometimes you'll ask the man in the street and they'll be like, gas prices are going up next month. I heard it from a friend. And it's you know, the man in the street can tell you what's going to happen in the future. And they don't realize that that doesn't make any sense. If oil prices are going up next month, then, you know, they should go up right this second. I mean, the word is out that something's going to happen ahead of time. Well, then why wouldn't everyone in the world just buy it and make money? Because there'd be no sellers. So, you know, the market is efficient in that there's a buyer and seller at the moment and prices are where they are. So, but my point is the perception in the public is that the market is, well, possibly at least one perception is the market just kind of chopping back and forth. But let me shine some reality on the situation here. Look at the E-minis here. All right, so here is the story in the last month. And, you know, or is that, let's see. Yeah, that's about a month. This is a rally. You know, we're rallying back. And yeah, we've chopped a little bit here, but in general, you know, we're coming off, we're way off the lows of the initial sell-off and the crisis, and the market has been rallying. So don't get it twisted here, folks. You know, we've been rallying ever since here, right? March 16th. We've been in an uptrend here, and as I said, the easiest way it seems people are losing money here is by shorting into this. And you know, we saw it happening initially, people saying, well, that's not the low. And then we got a little bit higher here and people saying, I'm going to wait for a pullback to buy. And meanwhile, there hasn't been a pullback. Look, there hasn't been a significant pullback. You could call it this here a little bit of a pullback, but we went up to this level around 3,000, and then we've chopped sideways here a little bit, but the overall trend has been up. Now, people are making the case of this big number, 3,000 here, and saying, oh, well, 3,000 means something because it's just that psychological rounded number of 3,000. But be careful if you're going to short this stuff, because as we know, markets generally go up. So if you're coming in to short stuff, you're immediately putting the odds against you long term, right? Because the markets in general move up. So keep it in mind if you're gonna short stuff. It's the same kind of logic that I use when people say I want to get long TVIX. If you're going to get long TVIX, realize that the odds are against you, and you've got to have the exact right timing for that to work out. And if it doesn't work out, bail after 48 hours, because there's several forces working against you. Even when we're relatively flat in the VIX term structure, with TVIX, you've got a 2 times leverage product, which is going to decay just based on rebalancing. Excuse me. All right, so let's take a look at the VIX term structure as we enter the day here. And we did go back into contango in a pretty decent setup in the term structure yesterday, as the down move in the VIX far outpaced the down move in the futures, and that's what you really need to get back into contango. Against you, even when that's weird. I started talking on that screen. So we see here we've got the VIX spot well below the futures. And we have the front month futures. As I stated like 2 days ago, when we looked at this relationship, the contango level was just really flat. It was like 0.06%. And I said, as soon as we get past expiration, you're going to see this curve steepen. And indeed, it has steepened now to 2.5%. Average contango over the long term generally is between 5 and 10%. And we're halfway there right now, just 1 day after expiration. But more important in the overall scheme of things, if things stay where they are, the more important thing is the distance between both of these futures and spot, which as we saw, the VIX down move yesterday, we see VIX moving down faster than the futures, and that's what sets up this situation here. A, the contango situation, but B, the situation where if nothing else changes, these futures still have farther to fall towards the VIX. So term structure looking healthier. We still, when we look at it, we have that big pop up right before the election. And interestingly, not only do we have that big pop up, but we've got this kind of lower area behind that pop up, which has become more pronounced. Often we look at the term structure, we see usually what we see in a non-election year is we see December being lower than the other months slightly due to the fact that December cycle usually has a bunch of holidays in it, and it's just a slower time of the year. So if there was not an election, we would generally see December slightly lower than everything else. Well, the fact that there is an election and that's pulling up the October, it makes this kind of relationship even more extreme, because you have that seasonal pulling down into December and you have the election pulling up into October. So we've pretty much ignored this relationship up until now, but as we get closer and closer to the election, we'll start to pay more attention to the back end of the curve here. One of the reasons that I don't pay much attention to this has to do with the fact that there's just not a lot trading out there at the end of the curve. And I could illustrate that to you if we were in the middle of the trading day by pulling up barchart.com. But for now, you'll just have to take my word that not much trades out there in the curve. Now, people use the curve for their calculations and indicators and whatnot, but not much trades out in the back months. When we're trading VXX, TVIX, UVXY, the front 2 months are the only real concern, and we are right out of expiration. What that means is that all of these products are based almost entirely on this June future. The front month future, the price here showing 29.9. We're like 29 out of 30 parts that future, 1 part out of 30 the July future currently. And the symbol for that future, if you are looking it up on Thinkorswim, would be slash VXM20. M20 representing the June future. And as we stated before, that is back in contango, which is a good thing for decay for us here. Just noticing that stock I was talking about yesterday, ACB, gapping up 5 on the open here. It looks like the MJ industry is coming slightly back to life. I know so many people have gotten killed trading those stocks, though, that people are probably going to be a little bit more hesitant to jump in there, and I don't blame them on that. So moving forward, currently I don't have a position on in anything. I'm in cash right this moment, looking to reestablish. Let's take a look for a second just at VXX. And let me get out of the way here. And we can see just the continued down move off of this huge spike. And it does look similar to the VIX chart here from the spike. And it continues to kind of chop lower here. And we expect that to continue. So really, my positions have been shorting into this, shorting into any strength in VXX. And it's been working out great. I would recommend other people maybe give that a shot. It's certainly a proxy for being long the market. I was looking at TQQQs. TQQQs now 81. I remember buying these down here in the 30s and getting a nice scalp. But what if I just held? And let's see. Hey, what's up, Brent? ZIV. ZIV has not been talked about enough. That being the volatility product that focuses on the mid months of the chart. And here we have it here. ZIV can be a great performer to the downside. Remember, in the Volmageddon, ZIV survived much better than a lot of these other products. But once again, the curve is a little wacky out in the back months now. So there's not a lot of edge being long ZIV. I don't know if you would agree with me on that, Brent. Please, everybody check out Brent's stuff if you haven't. He has some great ideas and strategies for when we're kind of in a range like we are now, where like the market's rallied a bit. We're not on the lows in the VIX, but we're not in the middle of a huge spike to kind of make some income by trading either calendar spreads or some sort of like butterflies or condors, where you're taking advantage of theta time decay in your favor. And this is a good point, in my opinion, to be putting trades on maybe that aren't as directional, but just take advantage of the fact that of an uncertainty on either direction and collecting decay each day by using an intelligent way to sell options. This has been talked about in reference to gold. It's been talked about in reference to your higher volatility stocks like a Tesla. But remember, when a stock has a higher volatility, that means it moves around more. So it's not just the obvious thing just to find the highest volatility stock and sell iron condors in that one. The prices, you can become attracted to higher volatility stocks because the prices, the theta per day is higher. The how many bucks you're going to make off the trade can be higher with these higher volatility stocks. But, the end fact with them is that they move around a lot. If you've got a stock that's just old reliable and has low volatility, but it's just old reliable and it's going to hit that mark every month, that can be a better candidate to put on short trades in. The volatility numbers might not look as attractive in, say, like a 30 vol stock, but that old reliable that just never really gets out of its out of its range too much and just slowly moves up can be the better spot to put on some of these iron condor things. Remember, what we're doing in the stock market is we're looking for things that are priced incorrectly. You can say that, like, well, I love Apple's products, or I got a Tesla and it's a great car, but that doesn't mean Tesla the stock is a buy. Tesla the stock is a buy if it's undervalued compared with where it will be in the future. And so there's more of a calculation, and that extends to options as well. There's more of a calculation when you're going to put an options trade on than either I like the product behind this or volatility level is high. When you're selling options, you want the underlying stock to move around less than the options are predicting, right? So if you have a really busy stock, thank you for you like that beginning Famous Dave thing, huh? I'll have to find it for you. So when we're looking at stocks in the stock market, we're looking for something that has been mispriced, right? So once again, I think people get out of Warren Buffett. Now, Warren Buffett has been discredited a lot this year. He's made some bad trades, and a lot of people are, calling it that we're out of the Buffett era and stuff like that. But I think a lot of people misunderstand initially Buffett, and he tries to simplify things for people by saying, buy stocks that actually do something, buy a farm, buy something that actually produces a product. And I think that makes a lot of sense. But the stock market's more complicated than people come at it with sometimes. I think new people will come in sometimes and say, I've got it figured out. And buying value does not just mean picking stocks with products you like. It means something is mispriced, and you've identified that. Out of all the people out there that are trading this stuff, you've identified something that you believe is mispriced. And so that's kind of a hard thing to accomplish at times. But let's get back to the market right now. It appears that we are just on this ramp higher, and no amount of bad news can seem to put a wrench in it. So I understand people leaning long. The only thing that I kind of have in my head is that if we do move lower at some point soon, I don't think it would be a shock to anybody, would it? It seems like it would be more of a shock to everybody if we rallied really hard than if we move lower. I mean, how much can we really rally here? If the U.S. stock market were to take out the all-time highs right now, people would be like, "What is going on here?" And we've had some famous stock market people come out and say the market's toppy, and I guess there's some evidence from the curve, if you look behind me, that maybe there's a little bit of a top developing here. But I would not be surprised if we get a little a rip to the upside here. That wouldn't be surprising at all. So I guess the conclusion is what it always is. Nobody knows exactly what's going to happen as we move forward here. But be cautious about shorting stuff, because that's how most people go out of business, is trying to pick the top here. And that is not going to work for you in most cases. All right, so I'm trying to pull up the Famous Dave song to end this here. Thanks, everybody, for checking out the program today. And best of luck trading this market as we move into the day-to-day. I'm looking to reestablish a short, and hopefully you have a good trading day. See you next time.
You're watching Famous Dave.